So this is the second or third biggest point drop of all time, but it does not make the top 50 percentage drop simply as the numbers get larger. It is serious, though. Is it the beginning or the end?
It's impossible to tell, unfortunately, Brian, but I will say one of the things that is probably weighing on the market is the data is starting to come through. So, we first encountered this issue in January 22nd. Obviously, there's not going to be much, even the high frequency data isn't going to respond to it. We now see data like, small business in China activity plunging, other activity really pulling back. So I think part of it is just the personification of this concern is starting to come through.
Mona, as you look at the markets, we've talked a lot now about kind of where the damage is centered and what it might look like moving from China to other parts of the world. Do you think anything's out of whack to you, or does it all make sense, the fact that yields are at record lows and the stocks are only off, what are we even off from the highs?
About 5%.
About 5%? I mean, does that make sense, or is it going to be deeper than that?
It's interesting. We came into this year with a kind of a barbell approach on from investors on technology on one hand. So we saw large cap tech really outperform. But on the other hand, given the advent of coronavirus, we really saw this defensive play come into action. So yields, U.S. dollar, gold, even the REITs and utilities sectors, all, bond proxies, all outperforming. Where we have concern now is that tech sector, which had been the leading performer in the S&P. It is also directly in the line of fire when it comes to supply chain disruption, directly in the line of fire when it comes to the spread and the reduced demand from the global markets, very much multinational, very much dollar exposed. So we could see some volatility coming out of some of these leading sectors here. But that being said, the defensive play probably in the near term okay. So I think that's an interesting dichotomy we'll see in the markets.
Well, and I think the surge in cases in Korea, where there's a lot of tech supply coming from, that's certainly impacted things. And you see the stocks down. We think we were saying it's almost down 10%. What I think is the craziest thing about all of this is that China's down less than the U.S. and Europe are from its highs. And I mean, the color that Eunice was just giving us earlier, that things aren't back to normal by any stretch, but at least it's not getting worse. Last Friday, we were talking about how our most important chart to watch was cases outside of China. And then Saturday, it just exploded higher. So I think the fact that the market's down a lot like this today, I don't think is surprising, given that people are rightly to be concerned that it may be spreading. We don't know where it's going to go. That's the problem. But, and as Jack was saying, as data starts to come in, only time is going to tell.
And we should mention we're down about more than 1,000 points right now. The low was we were down 1,073. We're down about 1,010 right now. But one of the things you raised, Paul, I'm just curious about, because we hear this a lot when you say, look, the Chinese, this is not getting worse. How do you know? I mean, and not just you, how does anybody know? Are we to take basically at face value the information that we're given? Or is there this sense that, I go back even to the report about how the thermometers, they might be using the wrong kinds. I mean, is there a sense that we can trust the information they were giving us when it comes to coronavirus?
Well, you saw the WHO say that there was some, quote unquote, real progress. So I think that's, other independent agencies saying that there's maybe some improvement. Eunice was telling us that there's things are maybe getting a little bit more back to normal, still far from normal. But I think the key here, China is, we can't be 100% trusting of the data. What happens outside of China? So Italy over the weekend, that really freaked a lot of people out. And I think it's rightfully so. If we go tonight and there's not another big escalation of cases, I think you could just as easily see the market up strongly tomorrow on some relief.
Well, that's the irony, Jack. I mean, we just talked about how we're not that far off all-time highs, but maybe that's part of the problem. Is part of the reason we're seeing such a violent move today, down over 1,000, is not simply fears of the coronavirus and a slowdown in China, which, by the way, is responsible for 1/3 of the entire world's economic growth over the last couple of years, but rather that this is a market at 25, 27 times trailing earnings on tech was priced to perfection, and we are suddenly a long way from perfect.
Yeah, that's true. I mean, the fact is we enjoyed a 30% rebound or growth in the market last year on the back of barely 1% earnings growth. So clearly it was an valuation expansion. We expected best case this year that price growth would just match earnings growth. And earnings growth for the year has already started to get knocked down. So I do think that there are some pressure points related to valuation. What I'm writing about this week is really the bigger issue, and that is, will many of these tech companies, will many governments start to rethink their relationship with China? The fact is that, as a source of the unreliable source of the global supply chain, as perhaps, not quite as transparent as we'd like them to be, will we start to see companies and either countries start to shift away from China? And that will have broader impact for not only their economic growth, but for their investment prosperity over the next decade.